of course, per usual. Yeah, we're recording. We're good. So, on gold, from the start of the week was the ninth. Okay. The start of the week, we know we had a bullish bias into these highs. And we can further dissect that because, one, we took out these lows from the left. So, we taken out those lows from the left, inducing sellers. And then we also stab below the low again. So now we have a framework, we have an inducement high to work with. So we do not want to be selling anywhere below this high. So now that we traded into that high, we know that we caused the build up. Notice how we're breaking structure into this area, reacting off of this low. Price is just reacting off of this low. Then price induces lower, taking out this low. Early buyers were buying this. Notice how each tap we just get price just continuously buying off of this. Notice how we start taking out some of these internal points, inducing early buyers to still buy this market. And then buyers get trapped. And then here's what we get. So we taken out this inducement low. Yes, we taken out this inducement low. So we can potentially see upside price action. So since we've taken out that low, here's what happens. We trade above here, this inducement high. And notice how we can just see that from one time frame perspective. We don't have to go lower. But on any other scale you can if you want to, but it's easier to identify like on a time frame like the 1 hour or the 15. So we take out this high, inducement high that price was inducing sellers from. Notice how we had that reaction. This small little reaction point right here, which causes price to take out this internal low. Oh, sorry. It caused price to take out this low. Then we run higher. So that in that case we form our inducement low. Our inducement low being this low now. Buyers want to buy from there. We don't. We don't want to buy from this area. Notice how you get that small little reaction trap. Then price moves up higher, taking out this high, as well as internal from the left. But look at how we still leave all these highs intact. We're still leaving these highs intact. So therefore, liquidity hasn't been taken since we took in this high to the left. All sellers have not been trapped. Just because we've taken this high, we've caused a break of structure in the market, yes. But we still left resting liquidity above this high. Now, a lot of you may ask, how do you know that it will respect this area and sell off? You don't know that. That's why you just react to certain price action. And if you were in a long position here, that's why Marco emphasizes to take your partials at these given highs, these structural highs and lows, just because of the fact that price could easily sell off once it takes the high. So then again, to answer a lot of questions, how would you know that price will reverse after taking this high? You don't know. Remember, it's a game of reaction. So once this high gets taken, you want to be partially out of your position if you're in a long position from that low. So then what ends up happening is we basically have this continuation structure of price here. And then price takes that out. Because essentially, let's clean this up a little bit. Essentially, this price action was just that diagram that I just drew out. It's fulfilled its move. It's respected this liquidity block to the left, moved up, taking out internal. Now price runs for that liquidity because now we have a build up here as well. So now we just engineered even more liquidity to the highs by leaving this high intact to the left. Can we trade this PA here? Buyers induced, or is it risky? Can you trade that PA? In a sense of what? Like, you want to take high risk buys in this area? I don't recommend it. I really don't recommend it, because once the scenario that happened, once this high was taken, and we can go over on a lower time frame after I'm done with this. Once that high was taken, it's you don't want to be trading anywhere below. I mean, anywhere above these lows here. You don't want to be trading anywhere above these lows, because as you can see, we're just trading into this area, building more liquidity. So there's no reason to be taking any sort of trades in that area. So we take out this build up area, and now we form our liquidity block. So now we form our liquidity block. Let's go to the lower time frame now. So I just answered a question in the question section about this price action. So a lot may have been confused on why there was some sort of long entry in this area, but we still have all this liquidity intact above. We haven't taken out this area yet where sellers have been induced from. So look at how we react from this area. If I want to really refine it down to that area, look how we respected it, moved away, taking out these lows, traded back into it, taking out more lows. So we want to see price higher. How can we get that? So let's dissect this. We come into price. Let's go into 5. All right. We take this out, this high from the left. Notice how it's this candle here that trades above here, this high, trades above that high. A little build up here, build up of price action, gets swept. So on lower time frames, there's a potential internal area there that got taken out. Let's see if we can find it for you guys. So notice how we get this build up of price action after we take out this high. Price respects this area, induces higher. If we're getting real intricate, you could just drag this out from the left where this is reacting off of. Buyers are trying to buy this, trapped, and then you have this area that gets taken out. Boom. This was reacting off of this high to the left, which caused price to sell off. So notice how we also taken out this low, this internal point here. If you look very, very closely, you can see from a structural standpoint, we've taken out that candles high, induced higher, traded into that area, trapped. So we can agree that buyers were trapped once this low was taken because of the fact that we were still reacting from this area here. So in a sense, you could make this a bigger build-up area here. So this will essentially be the inducement from the left. So that gets taken and that forms an LB. Now we're taking this high out. Cool. So now we can go back on a 5. That's too much wording right there. Let's bring that back to a line. Okay, so we take the high out. Now what happens is we start to have this build up of price action. This build up of price action. Oh my God, I forgot how to duplicate. Okay, there we go. I have this build up here. reacting off of this area. So since we've taken out the low to the left, remember, everything to the left should be a reaction of a reaction to potentially generate liquidity in the market. So since we've taken out this low, we want to see price react from these essentially POIs to induce sellers so we can look for a potential entry. So we create this buildup, we start trading into it, and then we trap sellers. We take out this high as well as this high as well. So once we take out that high, we saw that we've taken out internal liquidity. So now we're not going to change our bias and say, okay, we're looking for sells. We're not going to change our bias because we still have these highs intact above. So we want to see price trap buyers. And where can we say early buyers have gotten into this market? If we point it out, we say from this low to this low. This low to that high is where buyers were essentially induced into the market. And we can just drag out where is the inducement coming from. Where is this low essentially reacting off from? And you would say from here, the left. So, therefore, grab that low, drag it out into the future. So, brother, what is the difference between a BOS and inducement? Essentially, let's draw it out for you guys. Well, let's draw it out for you, essentially. So, if you look at the model, basically, the model is based on inducement highs and lows. Basically, just a term that we use to make it easier for us to understand. Because whenever you come from different concepts or different systems, they use break-of structures in a way that they want to be trading from, but we want to be trading away from those. So we can agree that breaks of structure induce traders. So this form of breaker structure is a bearish breaker structure, therefore inducing sellers. We don't want to be taking any sort of trades in here. There's essentially no difference. It's just we want to see where traders are being induced from, and the break of structure essentially tells you that. So that tells me that we've induced sellers, and now we react from the area. Notice how we react from it, inducing sellers, making price move away after reacting from this high. Now, in other concepts and other systems, you would essentially be taking this trade from a supply zone, a fair value gap, or whatever the case may be, but we don't look at it from that lens. So reaction high gets taken. Cool. Now that induces buyers. That creates an internal breaker structure. Yes. We do not want to be taking a buy from this low. We want to see buyers get trapped. So notice how we're still building liquidity, building. Takes out the internal high, but we're still reacting from this high yet. We didn't take out the high yet. A lot of traders are still looking to sell this. They said, oh, we took out all this liquidity, so we can potentially still take the sell. Trapped. They're in profit. And then we're looking to buy this thing below the low. Now all sellers have been trapped. Now buyers have been induced. Why have buyers been induced? Because we've just taken out all the liquidity where sellers have been originated from. Basically where they were originally induced from. So it's been reacting off of this area. Let's draw that out. Trapped. And you have conveniently liquidity block below. So to answer your question, I hope I did it a little bit more in depth to make you understand it. Same scenario be for a bearish standpoint. There's essentially really no difference. We just use the term inducement to make it a little bit more what's the word I would use? Easier to understand, because we're not essentially looking for these break-up structures to trade from. I missed the buy. I was waiting for price to go more. Don't worry, I missed this buy too. I mean, I didn't see it in live time because I was looking lower as well, but hindsight, I saw it and then it was clear as day. So we take out the high. Now we could potentially come from the inducement low because we took out the internal high. Now remember, we still have the bias to go higher because we have all those highs intact to the left. So after we react off of this low, so price does this. It takes out this low. Takes out this low. But look at how we build up first before taking it out. So we react from it, and then we induce buyers. So we take out an internal point, inducing more buyers into the market. So notice how I just used that breaker structure to identify where traders were getting induced from. So highlights is just curious. I realized that there's an LB. There will always be another LB, higher or lower. It doesn't seem to end. So how do you really determine if that LB is an inducement or if it's valid? So here's the thing. You can say this is a valid LB. Yes, it is. But we have, look at the direction of the market. There's LBs all over the chart. Here's a LB here. We're not going to be trading from that. That's not aligning with the direction of the market that we're trading from. We've induced sellers. We have liquidity to the left. This is a LB here. This is a LB here. We've taken that high. But we're not trading from these areas because we're bullish. We don't want to be trading from those areas. So, essentially, your liquidity block has to align with the current market direction. There's always going to be liquidity blocks all over the chart, but some of them will be used as a reaction to generate liquidity. Like, essentially, this one got used to generate liquidity. This one did. Even though a sell-off happened because of that, because there was liquidity to target, it's up to you to determine if you want to take on that risk. Me personally, I advise not to, just because we know that if we're in a bullish market, we don't want to be taking these sells. 95% of the time, this could get stopped out, and that's just being real. So we have that liquidity block, inducement low that built up all this liquidity. Notice how we induce buyers one more time before taking out the inducement from the left. So take out that. All that price action is reacting off of here. Why can't I click it? Okay. Cool. And then Marco took the long. Pretty good direct entry long. Targeting, you could target these highs for a partial. And then full target at these highs. So let's see if there was any sort of confirmation in here, because we know this hit target, but I want to see if there's any confirmation. Okay. If there's no sound for you, it's probably on your end, because everybody said the sound was fine in the beginning. You're probably on the Discord web. I'd advise you to go on the Discord app. So we ended up taking out this high. Still bullish though. We just need to see buyers get trapped. So we take out this low now. This low induced buyers. We take out that low. We trade a little lower. I don't see any sort of confirmation entry. I do not see any sort of confirmation entry. So what we do, take out this high. We react off of this area, this liquidity block, and we generate liquidity. So let's just mark out that whole area. We react off of that area, sell off. We built liquidity below this low by taking out this high and respecting it. So we essentially trap buyers by taking out this inducement low. So we create a liquidity block there, but I don't see no entry I would take. I don't see no entry I would take. So there was no confirmation entry for me. Price just runs the highs. Let's see if there was another entry on the lower time frames. How could you get involved in this price action? How could you get involved? I really don't see how you can get involved. Okay, so we take out high. Let's go. Let's just dissect this. So high taken, respected, high get taken again. Then we trade lower, inducing lower. Okay. So what we have here is an inducement high. What do we do in between that is the question. Okay. So we leave this. Notice how we have this build up. So we have a liquidity block here. After we just trap buyers. We just trap buyers. A lot of you may be focused on this. Don't worry about this. Don't worry about that. We just induced higher here. Respected it. Let me actually make this a little bigger so it just, you can see what price reacted off of. Respect, trade up higher, and then it's respecting this area as well. Boom. So buyer's trap, liquidity block. So now we react here, create a buildup, and then we trade higher. Now we left an inducement low here. So we left an inducement low there. We do not want to see buys until price trades below here. Okay, so we take the high. We take the high. And now what we see, price trade into this inducement low. And then price takes a high, showing you that they're inducing buyers into the market. So let's go to the 1 minute so it can potentially be cleaner. I keep scrolling through time frames just to see, you know, what it looks like on a cleaner basis for you guys. So we take out that internal high after reacting off of the inducement low. That's what we want to see. You want to see buyers get induced, trapped. So now the inducement low is taken. You can take the direct entry as soon as this low is taken because you have a liquidity block to support your entry. I don't think anybody would essentially catch this like the second entry as far as once price comes for the low again. That's just not an entry that I would take in my opinion. Just take it after this inducement low is taken. And then partial at this high and target these highs to the left. All right, so that was the buys on gold. Now we can go over the other price action that happened on gold. So buyers get trapped. Buyers get induced, sellers get trapped. Hold on, you guys are asking questions. Is that wick a liquidity block? Hold on. To answer your question, I don't know how to say your name. G Vitus. It for sure looks like one, but I can promise you in live time, I'm not seeing that. I'm just not seeing that. So. Oh, okay. G is good. Okay, yeah. G. I probably wouldn't have saw that in live time, so I wouldn't have taken it. You can say in hindsight, yes, it is, but I just wouldn't have taken that. Is this wick inducing buyers? Is that wick inducing buyers? Because it comes down. Yes, it is. Yes, it is, Power. By breaking previous candle high and liquidity block lower. I wouldn't say that's a LB though. That one, Power. That's just a little too intricate. I don't see any form of build up that price had with no real trap move down. I don't see that. Okay, let's get back to it. So we trap sellers, and now we run for this low aggressively. So we run for this low aggressively, but we still have all these lows intact to the left. So we induce sellers, but buyers have not been fully trapped yet. So we have a build up here. We are still bearish because we've just trapped sellers and induced buyers. But we need to find a way how we can logically play price into these lows. We have to wait for price to induce higher to trap any form of sellers that cause this move down. So what we get is this price action here. We respect these highs, sell off. Now we left liquidity at these highs. These highs get taken. Look at this build up of price action here as well. Build up a price action. Now price runs for this internal point. Look at that internal point, and you have an LB above. You have an LB above. In this scenario, it's really hard to take these type of entries because you're not really sure if price is going to run for this high and then have the sell off, or just sell off completely. I'd say, in my opinion, I'd probably take a confirmation entry just to be on a safer side, but I'm pretty sure that didn't come about. So if you're taking a direct entry, that's fine. I would say higher in risk in my opinion, but it's still a valid entry to take. I know a couple people asked me about this entry. Like while it was happening, I told them I personally would stay away, just because that fact of you potentially don't know if it'll trade higher and then have that sell off. Because it's really tricky whenever you induce sellers here, but you still have that build up to the left. You don't know if price will induce higher and then sell off, or just respect something in here and then after taking internal and sell off. So those moments are even tricky for me too. So here's the direct entry that you could have taken. Price takes the low, respects this build up area that you don't want to be buying from. Look at how these lows all respected each other. You don't want to be buying from that area. So you could just drag that form of liquidity out in the future. Then price takes an internal point, sells off. Okay. Before we sell off though, look at this. Okay. We take out these lows and then we induce buyers by taking out this high. So we take out this inducement high, this build up. You can check a box in your chart settings to keep the spot you are in when switching time frames. Save you scrolling like that on scaling lines. Really? Hold on. Where is that? Oh, wow. Thank you for that, because I definitely needed that. All right. So we take out this high that causes build up after taking this internal low. We're still reacting off of this area to the left, so you can potentially have some sort of sell opportunity in this area. So let's see if we got that. Oh man, that's pretty clean. That is clean. I don't have to scroll too far, so that's actually good. Okay. So here's what we get. We take out this low. Yes, we take out this low and then we run for the inducement high. Once price is above this high, sells are valid. Because one, we have this liquidity block above, and we had this buildup. This buildup is what takes the low. So since it wasn't just price action, since it wasn't just this price action that took the low, and we have a buildup after reacting off of the zone that's taking the low, we use this high as the inducement high. This high becomes the inducement high, and now you have a liquidity block above. So is it the box I would mark as red for retail? That's the tricky part for me. Give me a second. I can answer that. So this entry you could take into this liquidity down here, because we know we induced buyers from that low. We induced buyers by taking out these highs to the left and also that internal point here. And we also have a major buildup there. So could target that area for shorts there. And that happened in London. So that's one short entry. And then we induced buyers before taking out the lows to the left again. So we take out these lows. And then we have an inducement high here. This gets taken out. Nothing I would take a direct entry off of. Yeah, I just don't know. I would have wanted price potentially above here maybe to take a direct entry. It's just kind of tricky here. I would wait in confirmations for like price action that I see like this. I would wait for confirmations. So we take out the low. So we trap all these buyers here. So now we can anticipate a potential reaction off of this low because it is a liquidity block. But we still have resting liquidity to the left. So we do not want to be trading from this area. We do not want to be taking buys from it because we know there's resting liquidity to the left. So let's go back. Sheesh. Okay. Let's go back to the 5. Clean this up. Okay, cool. So now here's what we do. We're reacting off of that LB from the left. And now we have an inducement high. This inducement high is a liquidity block. Notice how we get that reaction to that area. Most of the time, whenever your inducement high is a liquidity block like this, you can expect price to react from it and move away. So it does that. And then price takes out that high. A lot of people will probably say, oh, couldn't you buy from this low? Lower probability. Remember, we do not want to be trading from these lows. We have resting liquidity to the left. So notice how price is just building liquidity, induces higher, takes the low, and then takes out the inducement high. So now we just formed a LB and then sold off. Honestly, literally nothing in here. Nothing in this price action I could take, because see how this impulsive price action taking out the low. It's way different than this sort of structure where we react off the zone and then take out the low and use the internal as the inducement high. There was no way we could have done that here. So now we trap these buyers. So buyers get trapped. Buyers get trapped. We've taken out this whole build-up area to the left. Now what price does is we run up, take out this high. That lets me know we don't want to be trading from this low. Look at how this impulsive price action just take out that high. A lot of you see liquidity block. I see liquidity block too, yes, but not a liquidity block you want to be trading from. We have an LB here. We take out the internal before it. Price reacts off that area. And what do we do? Let's go on a lower time frame. Damn, that's so much better that it doesn't, I don't have to scroll too far. Okay. So we trade into this area. Look at this internal that it takes out. So it takes out this internal, reacts to that LB. Look at what it did before it take out this internal too. Look at this buildup that it created. Price respecting these lows. Look at that. Okay, so what do we have here? We react off of this low, creating that internal point. So we create that internal point. It induces buyers, that internal point, and then trades to the lows. Takes out these lows here. So price then takes this internal out. This is a very hard entry for me to take because I would want it to see price tap into this low first to engineer some sort of liquidity to then take the short. If it take this high after respecting here, then inducing buyers. So this is not an entry I would take. It takes the internal, respects this area, this LB. Valid, yes, but it could be potentially higher in risk because it could be higher in risk because you do not know that price will respect this and potentially not move away. So price could have easily done this, respect this area and move away. So therefore, that's why I deem this position higher in risk. But if anyone wanted to take a potential higher risk entry, here's how I would do it. You would take that, stop there, and you would take it to this liquidity block. So the origin of the liquidity block, basically. That's where I would take that short. Just because you're so unsure of when price would induce buyers after tapping into this liquidity block. So, how do you know that this is inducing a high? I always seem to mark out the one at the top. That's so that'll be the structural high, G, but the one that I marked out basically is where sellers it's going to be that point where sellers took out the low. So that high where sellers took out the low would be my inducement high. The high that you marked is the structural high. Or can any of these three highs be the inducement high? Okay, so where were we? We've reacted from this. We reacted from these highs and sold off. Okay, now we have liquidity there as well. So currently we have liquidity on both sides of this market. Therefore, price action you don't want to be involved in. Just wait. So price takes out this high. Takes out this high that we had to build up from. And it reacts from this area. This area is getting used as a liquidity block. Why is it getting used as a liquidity block? Because if we see what it did on the lower time frame, how we taken out this inducement high. There's your LB. We have a build up with this area. We respect, move away. Now we engineer more liquidity by inducing buyers by taking out this high. So once we take out this high, sort of a Da Vinci setup, like how we like to see price do this. How do I draw a bullish? Let me draw a different example for you guys. Hold on. I just get so confused on these drawings sometimes. Okay, here's a bullish example. So we trade back into the low. Same example, how this liquidity block here was so impulsive, just a break above. So we trade into that area, and then we just trade back into that area and do sellers, and then we have that inducement high that was created, trapped, and then boom. So let's kind of make it clear as day for you guys to see. So the inducement high gets created because there's probably no internal here. So it gets created here. Oh, that's supposed to respect that. Okay. So then sellers get trapped, and then you have sort of LB here, or you use this one. So that's a Da Vinci that we'd see here in this scenario. Buyers get induced, You could take the potential direct entry, but the RR just doesn't look like it matches up. That's a pretty wide stop for a pretty close target. So up to you if you want to take a 2.85. I wouldn't. I just wait for the confirmation. So it looks like you get a confirmation, but this is just terrible timing. This is like Asia. That gets taken. Have a liquidity block here. It's hard to take this entry because it's what is 1800? I don't remember what 1800 is. I think that's 6 o'clock. That's 6 o'clock. So that's like right when market opens. Who's taking that? Nobody's taking that. So the low gets taken. The Da Vinci setup is done. All right. So now let's continue on with gold price action. Yeah, this webinar is going to be a little bit longer, guys, because I've been stopping to answer your questions, and I still have to go over NQ. So I'm okay with that, though. So let's go. We take out this high. I'm getting a little bit ahead of myself. Sorry. Let's go back. So here's what we do first. We take out the low. Now we have an inducement high here. So we have an inducement high. And also look at this. It's reacting off of. We had that reaction. Sell off. Now we trade back into this area. We trade back into this area. No sort of entry into this high. We take out this inducement high. Look at this very intricate liquidity block you have here. As soon as this high is taken. Now me, I wouldn't have seen this in live time to take any sort of short because there's no liquidity at the lows yet. So therefore, there's no short for me because we didn't respect any lows. So I wouldn't take this short, to answer your question if anybody had a question about that. Okay, so now let's go step by step. We have an inducement low now because we can agree that this price action from this low to here induce this high. So inducement low, pretty much of a wide stop if I were to take this entry covering this low. So I wouldn't take that because honestly I'd be targeting these highs, or safe target is this high. So terrible RR to take that trade. So I wouldn't take that entry as well. Just wait for price to develop. See if you can get a potential confirmation, but who knows. I noticed this price action too. Look at how it runs this. So more times often than not, if you see price come to the extreme, there was some sort of inducement low on the lower time frame. So notice how we get this build up. Price reacts to this area, and then it takes the high. So now we have an inducement low. Where would that be? Where's the low that takes the high? You can mark out this one, because that is the low that essentially takes out the high. So notice how we also had a build up at this area too. Notice how we also had a build up at that area. We respect that candle, and then price is just fiddling around, takes it out, and now you see the move happen. So more times often than not, this is a harder entry to take because a lot of people won't really see this. You won't really see this until you train your eyes more into seeing where price is at, as far as, okay, we have this high here, we reacted off of this area, we also have this candle, and since we had this inducement low here, since that entry wouldn't be viable to take covering this liquidity block low, where could we see price potentially come lower to? So that's the question you would ask yourself. And also getting this information by seeing that price is reacting off of this candle to the left, you can say, okay, I want to see price below that candle. Now, to each your own. If you want to get data on that type of entry, you can. I'm still collecting data on this type of entry, so I won't recommend taking it 95% of the time, just because you don't know if you would miss this entry. Price could easily just stay in this area and move away. So valid entry, but hard to take that, truth be told. So take that high, and then we just go bullish from there. So say if you did take this entry after the first tap, of course, because who knows that re-inducement's going to happen. This would be your stop. So you'd basically have the same RR though. So it's not as viable as you think. It didn't really do much for the RR, unfortunately. So we take out the high. We can agree that this is the structural high that induced sellers. The structural high. This was the inducement high, but this was the structural high. So we take out the structural high. We induce buyers. BOS. So now what we see is this. You could, I wouldn't take no aggressive entry because we just use this for that liquidity block. We just use that. So no aggressive entry for me. We induce lower by taking the low out. Oh, whoops. By taking the low out. Trap. So now we formed an LB. Cool. Formed a new LB. That's what you want to see. And remember, we have the aspect of reacting off of those lows. So we react off the lows. Cool. We want to see us react off the low that induced higher. So now we take out that low. Okay, we take out the low. More times often than not, I like to see the entry happen while we're still respecting the low. But in a scenario where we create a buildup like this, right? A scenario where we create the buildup, price respects it and sells off again. Now, here's a viable entry. Here's a viable entry because of the fact that we've respected this area and moved away again. So since we created a buildup above this high, which is already your inducement high, and you have a liquidity block below, it makes it more viable to take. Now, if it was an inducement high that just came down and not respecting this, keyword and not respecting this, it just came down and then just came up, I wouldn't take it. So there's entry potential number 1, covering that low liquidity block. Okay, Thursday that was. And since we had these lows could be your potential target, because now, since we had that break of structure, these lows now become liquidity. Now, as far as targets go, it's kind of harder to be on the swing side of this because we didn't tap into the area yet. So since we didn't tap into the area yet, be more aggressive with your partials, of course. But now when we look to the left, we have these lows intact that got respected, and we have this bullish reaction. So we basically do have engineered liquidity to the lows. Drag that out. We have that to target. So that's gold on Thursday. There was an entry Friday as well, which I missed, unfortunately. I missed this entry and I was so upset because I just can't believe I missed it. So let's clear this up because this looks very messy. All right. So let's look at it from a higher time frame standpoint again. All right. So we know we're still bearish because we trapped sellers, inducing buyers. So liquidity is here, and we also have this liquidity here as well. that price is reacting off of. So we can agree that we're bearish. Let's just put the horizontal ray. All right. So now what happens is we want to focus on what happens when we take this low out. We take out this internal low. A lot of people may think, oh, liquidity block, we can trade higher. We can react off of it and induce buyers again. Yes, and that's what we want to see. But it's not going to be the move that takes us to this high. It's not going to be that move. So we want to see this this low get respected, and then induce buyers in some way, shape, or form to where we can take a sell. So let's go to the 5. React off of that area. Actually, the 15 is cleaner for this. There's too many candles there. So we take out the low. Notice how we take out this high. We take out this, yes, but we also take out this here. So we take out that high, BOS. If you really want to get intricate, notice how the price action where sellers were originally induced from. So the structural high, basically. So from that high to that low is the structural range. Notice how we take out this internal point as well. So we could refine it down to that. Liquidity block formed because we've taken out an internal point from the left. So now, no entry in here yet because we don't have, we want to see the model form. We want to see a high probability model form. So this happens. This, in my opinion, would be a higher risk entry to take. Remember, we didn't have any sort of build-up in this area. There was no sort of build-up, respect, and move away, then take out the inducement high. Since we didn't have that, higher risk entry to take. Higher risk, still potentially take it. It's valid, but remember, higher in risk. So we trade into these lows. Trade into these lows. Trade into these lows. Okay, we respect that area. Now notice this. Remember, we didn't have that buildup. Now this area gets used as an inducement high. This is where sellers were getting into the market from, which took out this internal point, that internal point, and traded lower into that liquidity block. So we take out where sellers were induced from, essentially that inducement high. So now a lot of people could say, hey, we just use that liquidity block for this. But I would tell you, in this standpoint, there was no sort of inducement high that had a buildup. So the liquidity block took out this as well. I'm sorry, not the liquidity block. The price action that came up into taking the inducement high took that as well, because all this price action is a buildup. That's why I said you want to see that buildup form. That price action is high risk to take that entry. You want to see that buildup. So all that price action is just this. How does Marco draw that? So it's like, okay, basically that. So you can either take the aggressive entry as soon as this buildup area gets taken. And notice how that buildup area respects the low. That buildup area respects the low. So you mark this as liquidity block because it reacts. Because it reacts here and into sellers. I marked that as a liquidity block because it's taken out the internal point. So if we can agree that this is the structural range, This is the last high before this low was taken. So this would essentially be the inducement high here in this range. But this is just me refining it down, right? So if we're looking at this structural area, I could go on the lower time frame for you to make it simpler for you. So notice how this area, this was the last high before we taken out this low, essentially, where sellers were getting induced from. And you have this sort of area right here that you can justify as an LB. Price reacts off of there. I didn't want to get too intricate because it looks, it can be too much for a lot of people. I wanted to keep it simple. So I'll just go back to the, we could stay on the 5 minute actually, because this price action is kind of important. The fact that we respect that, and then we respect this area. So price comes for all that. I can refine that down to even this, which is even better, because if you're on a lower time frames, that even looks clearer. That even looks clearer to some people. So now we can refine that to this. We say price reacts from this area. Just carry that whole area that price reacts to. So there's your inducement high. Price comes to the extreme. So potential entry 1. And then you also have a confirmation that I'm about to show you right now. That was very clean. So you could take it into this low, partial heavy, and then you also have the higher time frame low, that price is reacting off of. This would have been a crazy position, man. Imagine taking both of these entries. Now you have a liquidity block above because we just took out the inducement high. Now, hard entry to take, yes, because we didn't have that like build up, respect, move away, but still valid. So here's what we do. We take out the low. Now the reason why I'm not going to take this entry, because remember, it's high in risk. Like I said, no build up. We took out the low. We just took out the high. So we formed the LB. Yes. But look at what we're respecting. So we respect this area. So this gives me reason to take this entry now, because we tapped into this area and it induced buyers. So basically now what we're seeing is a Da Vinci. So once we respect that, we take out that low. We're still respecting this low to the left. As soon as that candle's high is taken, as soon as that happens, you take the sell. You may be too slow because a lot of the times this happens very fast. You know, your fill might be here on a realistic note. So let's say you got filled in there. Entry would be above there. And that's like the way I would take these continuation type entries. So just imagine the opportunity on gold this week. Actually, guys, I am not going to do NQ because that was pretty long. That was pretty long in my opinion. I'm going to keep it to gold for this webinar because I was getting a little bit intricate into the doing a process basically of what the price action looked like step by step. So I feel like that's a lot of value for this webinar. So if you guys have any more questions, we could answer that before, we sign off. Go hard. There's a video in the course that shows you exactly what the Da Vinci setup looks like. Gulp. Yeah, I didn't drink any water during the whole webinar. That's why I'm like so winded. I mean, where can I study it in the course? It should be in the WAP. You do have access to the WAP, right? I am glad you were detailed. I can watch back and go slow to see and make notes. Yeah. Yeah, yeah. Appreciate that. Appreciate that. Further forecast on gold. Um, I'll clean the chart up. Hold on. These lows. First webinar where I actually learned some. Other webinars I try to mark out charts with you and get confused. Yeah, really don't try to do that. Whenever you're watching a webinar, just stay locked in. Stay locked in on watching what's going on. Because whenever you're multitasking and watching a webinar, you're not really taking anything in. Now, for say if you're watching a course video and you've watched it already before, and it's like your third go around, maybe you can find that piece of price action and, you know, try to follow along with it. Just to be clear, can you answer this real quick? What makes a valid internal point and not a wick above or below? What do you mean a valid internal point? Like a valid inducement high or inducement low? So it's my high, something that causes. It's not necessarily. It's not something that will necessarily cause a buildup. It's something that we can expect a buildup to happen at if it's a liquidity block. So chances are, if an inducement high or low is a liquidity block, there's a chance that price can respect that area for a little bit and generate liquidity. Like when marking out an internal point, that should be taken. What am I looking for? You're basically looking for a buildup at an internal point. So look at this internal point that I marked out here. You see how we traded into that area and then we took it out a high? Something like that. Like basically what I went over during the whole webinar. So this is an internal point. React off of it. Have this sort of build up a price action. It's the same thing for a buy standpoint. If you're looking to buy, but this is like a bearish standpoint. React off of an area where price was induced from. Buyers were induced from here. Trade back into that area, respect it, and then take highs and then sell off. Any more questions, guys? On to like 2 more questions before I cut out. I think it goes to what you said when you're at the 15 and it showed that one candle on the 5 had a low than a high. Harder to see one new. Yeah, it's very harder to see one new. That's why I kind of like to surf through my time frame so you can get a better view of it. You know, like you need to see what it looks like on the 5, even though on the 15 it might look easier to see. But say, for instance, if you were trying to execute on the 5-minute time frame and you were unsure because you never knew what it looked like, you know. But sometimes it's not going to always be that case of it needs to look the exact same because we're not looking at it from a pattern standpoint. We're looking at it with logic pertaining to the system, like what's happening. Basically, how I just went over how. Let's go. Where's the price action? Basically, like how I just went over this price action. So internal high or low can be inducement high or low. No, not essentially. An internal high can be an inducement high or low. I want to answer your question to the point where you'll understand it, but you really won't until you watch the videos, as far as seeing the video of the inducement high and lows that's in the course, because it explains it perfectly to where you can conceptualize this price action. So if I were to quickly explain that to you, though, because I might as well. Here's a drawing. We react from this. Okay, we've taken out. Actually, let's do this. Let's do this. Okay, we've taken out a low. So we've taken out a low. Structural high here. Inducement high here. Why is it the inducement high? Because from here to there is where we took out this low. So that's basically it. But yes, I recommend, if you're really trying to piece everything together, you have to have the course, because I try to be as in depth as I can with my webinars, but they're not enough